so I think we can start with Bitcoin as always. Let's start with a high time frame, monthly and weekly. At the beginning of this month, when price was quite bullish around here, we discussed in our previous streams that this could potentially be the week of the monthly candle, since monthly is still bearish. Monthly is trading into premium of this dealing range over here, and also that's a pretty bearish point of interest, not only because it's in the premium, but it's also because we have this bearish fair value gap over here and the bearish IFG. So overall bearish point of interest. Welcome Roger Bodger. Overall bearish point of interest on the monthly. It also aligns with time pretty well if we form the top right here, right? We're in the second half of the month now, so this could potentially be the week for the monthly, and then we could see some expansion towards the downside in the next few days until the end of the month. Okay, on the monthly we have the high time frame bearish point of interest. Then if we drop down to the weekly time frame, we are also still bearish on the weekly. Price formed some highs over here. The past few weeks traded higher, it swept those highs, but still the weekly is still bearish. This could easily be just a lower high over here. So the structure on the weekly is still bearish. You can also look at it if you take the fib of the last leg down, the dealing range. We traded again in the premium of that range, the weekly range, and we're also trading inside this bearish fair value gap. We're still respecting the lower half of this bearish fair value gap, which is something I pay attention most of the times. Whenever I have a fair value gap, let's say bearish, in that case, I want to see price rejecting from the lower half of it. If the fair value gap is bullish, I want to see price going higher from the upper half of this fair value gap. So that's a simple rule of thumb I have in mind to evaluate how high probability a PDRA is. For example, for fair value gaps, ideally, I don't want to see price to close inside. Here, for example, it's not the ideal case that price closed inside this fair value gap, but still the second criterion to evaluate a fair value gap is to see how price is reacting from the lower half of it, in that case the bearish one. So far price really tapped into the middle of this fair value gap and it shows signs of rejection. So let's see, on the weekly we're still bearish, right? So on the higher time frames, weekly and monthly, I'm bearish. So I wait for lower time frames to also start shifting to bearish, since we were in an uptrend the past few weeks. So we have to wait for the daily. I was waiting at least for the daily to also shift to bearish, so I can start looking for shorts on the time frames I execute, which are H4 and H1. So that's what I normally do, since we have quite a few new people today. That's how I analyze the charts. I start with a high time frame. For example, at the beginning of the month, I start with a monthly. This I do it only once per month, and then every week I start with a weekly. I frame the bias for the week, and then every day based on the daily candle, I mark out my levels for the day after. So I have the analysis on the monthly, on the weekly, on the daily, and my trades are based on the H4 and the H1. As I said, I was waiting for the daily to shift also to bearish, since it was bullish the past few days. And yeah, what daily is currently doing. On the daily, we've been pretty bearish the past few days, but yeah, there was no chance for me to get into shorts. There were not many confirmations. Now we have this daily fair value gap, which for me it's a pretty critical level. If price closes below this one, as I also said in my channel, if price really closes below this fair value gap, then we will also have the Monday range for the week, right? Monday's highs, Monday's lows. So then from tomorrow, if we really close below that, for tomorrow, I will start looking for shorts from this fair value gap. So this will be the high time frame point of interest for me, the daily IFG, right? This was a bullish fair value gap, but price closed below it. So now this turns into a bearish PDRA, a bearish inverse fair value gap. So from tomorrow, if we really close below it, I will start looking for triggers on the hourly time frame from this area over here. Again, ideally from the lower half of that area, right? So I have the daily, the high time frame area, which I'm interested in looking for shorts. It's this fair value gap, IFG, if it gets confirmed, right? If today we close below it. And then I drop down to even lower time frames, the time frames I execute. And then I have to really find, so I mapped out the plan. I have a bias, I have the high time frame point of interest. But then this is not enough. This is 50% of the job. Now you have to understand how price will trade towards the drawn liquidity, right? Because in that case, if we're bearish, the next potential drawn liquidity is what? It's this low over here, and then potentially all those lows down there, right? These are what we call weak lows. These are lows that haven't swept another low. So there is liquidity potentially resting below those lows, right? This low over here, this low over here, maybe that low. I mean, there is a small low over here. So normally when we have lows that haven't swept another low, like these guys over here, right? The equal lows, you're expecting some liquidity to be resting below them. So this is my drawn liquidity, but then I have to figure out how price will most likely trade there. Yeah, then I drop down to the H4 time frame. I have the levels that are important for me for the week, like Monday's range, the weekly open, the daily open. All those levels are pretty important to have them on your chart if you're taking intraday or intra-week trades. For example, for intra-week trades, the weekly open is pretty important. For the intraday trades, the daily open is pretty important. You can backtest that, you can add it to your chart and see how price really reacts from those levels. So we have our high time frame PDRA, which for me is this daily fair value gap. So if we really close below, then from tomorrow I want to see what price does on the hourly time frames. The first thing I can see here is this high over here, which I call a weak high, since it's an H4 high that didn't sweep liquidity from another high. So this could potentially be a high where liquidity is resting above, and it also aligns with Monday's highs. There are two scenarios for me from here, which I would like to see. We either close below on the daily, and then on the H4 here we have this order block. So I could either see price trading up there into the order block and then reject from there, close below Monday's lows, and then I would start look for shorts. Because for me here, shorting this order block is not a setup, because putting my stop above a weak high is something that I never do. My stop loss is always above or below strong highs that have swept liquidity. So for example, in that case, this would be my stop loss, right? It's a high that swept another high. I would never put my stop loss above a high that looks like that. You always want to wait for a manipulation and then you enter your trade. So in that case, you would like to wait for that. Then you look for shorts, right? You always want your invalidation to be above or below sweeps of liquidity. So in that case, the two scenarios that I'm eyeing is either a deeper pullback in the upper half of this daily fair value gap, sweep of Monday's highs, and then wait for an hourly trigger, market structure break, whatever you prefer as your entry trigger, and then look for shorts from there. Or if price is even more bearish and it really rejects from the lower half of it, then we could potentially do something around here, reject, and then we can start looking more confidently for shorts after we get this second confirmation, since in the second scenario, price could potentially start trading below Monday's lows, which is something good for a weekly profile. If you're bearish, you want to see price to either sweep Monday's highs and then break back inside the range. Then this is a good profile for shorts. If your targets are lower, you don't want to see price trading above Monday's highs and then staying and trading above. So in a bearish case, but in another bearish case, it's also good if price forms the Monday range and then trades below it and then doesn't reclaim that range. So in that case, if price doesn't offer the manipulation that I want to see to get into trades, I would wait for another confirmation, which would be a closure below Monday's lows, and then maybe we form some other PDRAs over here. Then I could have two confirmations and then I could start looking for shorts again. So it's either the manipulation gets offered here and we get the rejection, then I would be interested in shorts, or price remains weak, remains below this fair value gap, but then I have to wait for either a closure below Monday's range or at least some sort of hourly manipulation before looking for shorts. Because yes, we're bearish, we have a target, but without without confirmation and manipulation, you can't really know how price will trade over there. You need the bias and the narrative. So yeah, I think that's with Bitcoin. Monthly and weekly still bearish. Daily, it's kind of shifting now. If we can really confirm the bearish bias on the daily, then we could start targeting some lows from this leg up. I mean, we always take it level by level, right? The first target would be those lows over here, and then you see how price reacts, and then you act accordingly. Price could reverse from there, for example. So that's with Bitcoin for now. I like what I'm seeing. I like price trading below this guy. If it really closes below, then this for me, it's really looks good for a bearish week and a bearish weekly candle. Yeah, as you can see, I pay attention a lot to the weekly and the daily because these are the time frames where I spend the most amount of time. These are much more important than the execution time frame. The execution time frame or the entry model are not as important as having the correct bias and being able to identify at which state price is currently at. Is price at the moment expanding, for example? Is price consolidating, or it offers a pullback before another leg up, for example? So you always have to identify the profile, the market profile that price is currently at, and then you can start caring about entry models and low time frame confirmations. First, you have to really know the bigger picture of price, and then you can start looking for executions. So it's much more important. So yeah, that's with Bitcoin.